Hi everyone, welcome to today's video. So on today's video, we are going to do something very interesting. I'm going to discuss 8 specific points about today's stock market in a Q&A format or simple 8-point format. Please give this video a like and watch this video till the very end because this video is going to help you build conviction in the stock market, and it is extremely important for you as an investor to have conviction on the investments that you are taking and the bets that you are taking. Because if you have no conviction and if a stock corrects by 5% or if a stock corrects by 15%, you will start panicking. So please watch this video till the very end. I am going to summarize a lot of information and give you key pointers. So point number 1, let's discuss the state of the stock market. So the stock market today corrected by 2% and I started getting messages like that, Akshat, you know what, everything is going to go haywire, Indian economy is going to crash, FII, DIIs are selling, panic. Okay, first and foremost, it is very important to remember that this is not something new. Stock market corrects by 5%, 10%, 15% all the time. This is not even a correction. It is just an adjustment, right? So please keep that in mind. You can take a look at the entire history of the Nifty chart. Just Google Nifty 50. Look at the historic trend of Nifty and you will see these type of 2, 5, 7% corrections all the time. So there is nothing to panic. That's part A. Part B is that you must have a viewpoint about the market. The viewpoint being that, for example, I believe in the story that India is going to grow. The growth phase has just started. The bull run has just started. And in my opinion, the markets are going to do well for a fairly long time as of now. Now, why is that? I have made several videos on this topic, so you can go and watch it. But just to give a very quick explainer here, that right now, any major correction where the market corrects by 30, 40, 50%, it is most likely going to come by the interest rate adjustment. And that is not happening if that does not happen in a jerk, right? Where Fed say that, you know what, okay, let's just increase the interest rate by a lot in just one go. Unless that scenario plays out, it's unlikely that the markets are going to adjust too much. So please remember that. That is my viewpoint. And this is based on the fact that COVID second wave happened. Bunch of other different bad stuff has happened in the economy since 2020, but that has not brought the market down significantly. We have been on an uprun. The liquidity is still there in the market. So as a result, no major adjustment should happen in the market. So this is first key point that you must remember. And another very quick consolidated point here is that during these type of corrections, when 5%, 7%, 10% correction happens, good investors identify that, hey, you know what, these are buying opportunities for us. So they go and start investing big, because this brings me to point 2. Point 2 is that price tend to be sticky. This is an economic concept. It simply says that, for example, if you bought this iPhone last year, it would have costed you, let's say, 1 lakh, right? Now, this year, this will be 1.3 lakhs, a newer version of it. Why? Because prices do not generally come down in a growing economy. And what makes up the prices? For example, when you buy atta or when you buy book, when you buy sugarcane, when you buy something, these are being manufactured or are integrated into the supply chain by the companies whose stock you're purchasing eventually. So even their prices tend to be sticky. For example, today, ICICI Bank fell by approximately 4.5-5%. Now, do you really think that you can keep that stock down by like 5%? Will it not make its previous peak again? It will 100% do it, right? It's just a matter of time. Yes, it might happen that it might consolidate for 6 months, 8 months, but it will definitely come up by 5-7%, no doubt about that. Now, this brings me to the third point where I started the video, that you need to have conviction. If you believe in a growth story, if you believe in some other narrative, it is fine. If you believe that, you know, crypto market is really good or really bad, if you believe that, you know, ITC is really good, really bad, if you believe that Bajaj Finance is really good, really bad, or if you believe that, you know, markets are going to correct, you can believe in any narrative. There is no problem with that. All of us are entitled to have our opinions through our own set of logics. No issues around that. But the important point to remember is that you must have conviction and you must back your analysis and thought process with some facts. If those facts are there, they will give you conviction and act according to your conviction. Don't get swayed that market corrected by 2%, 3% and I'll start selling all my stocks. Please don't do that. This is the third key point that you must remember, that whatever story you are choosing to believe in, please stick by it. Do not keep swapping your story all the time. This brings me to the fourth point, that people will try to sway you by telling you different types of stories. For example, some news will come that, you know what, Morgan Stanley came up with this report that they are downgrading India. Bad stuff is going to happen in India now. So probably I should sell my entire portfolio and go away. No, please do not do that. Even big investors, for example, Mr. Ramdev Agrawal, Mr. Rakesh Jhunjhunwala, any other major investor, they never go out of the market. Their simple philosophy is that try to stay invested in the stock market as much as possible. Now, why is that? Because this is a very genuine question to ask, that why is it that investors tend to stay invested in the market even when it is falling, even when it is rising? The answer to that is very simple, that no one can time the market perfectly, right? It is impossible to do it. Some days you will see really good stocks give an up move by 20%. Some days it might fall by 15-20%. But as long as you understand the fundamental value of those stocks, and if you have picked fundamentally good stocks, there is nothing to be scared about. So this brings me to the fifth point, that how would you define fundamentally good stocks? And what is it that you must do to identify good stocks? So number one here is that, you must educate yourself. That goes without saying. Number two, you must keep an eye out for the state of the stock market in general, because if the market corrects by 50% and if your stock falls by 50%, then it's not a bad stock. But if some stock is correcting by 30% and the market is going up by 20%, then yes, there might be something fundamentally off. So keep an eye out for your portfolio, readjust it. If you're a new investor, buy only quality stocks, stocks that you understand. It's so easy. For example, today market fell. Good stocks are available at a slightly inexpensive price. For example, HUL, HDFC AMC, ICICI Bank, HDFC Bank, Kotak Bank. All these are good stocks. These have given previous high which are higher than what it currently exists. These stocks have all corrected by 4-5%. It is very normal to go and invest in these type of companies. You will not lose your money. Okay, let me just quickly qualify that. See, what happens is that you have to play like a 60-40 game. For example, if you buy 10 stocks, 6 stocks are doing really well, 4 stocks are in a loss. Then overall your portfolio will still be in green and you will still make 15% return if you have invested A, for a long term, B, if you have invested in good companies, right? So it is highly unlikely that if you go and pick companies like HDFC AMC, HDFC Bank and bunch of good companies, it's not as if that these companies will go bankrupt. Yes, a temporary correction might happen. The stock might fall by 5-10%. All those things might happen. But if you take like a 3-year, 5-year view, you will still get good 15% CAGR easily. Now you might ask me, why would that happen? Can you back it up by giving me some example and some rationale around it? Absolutely. Because if the economy is growing, then what drives the economy, right? If you're believing in the story that, India's economy is going to grow, what do you mean by it? It simply means that if economy has to grow, all these companies like HDFC, Kotak, bunch of different good companies that you know about, they have to grow. There is just no other way, right? It's not going to be the fact that, India's banking is not growing, but India's GDP is growing somehow magically. On the flip side, if you say that, Akshat, sometimes GDP falls also, what happens in such a scenario? Okay, GDP contraction can happen and that's a story. If you're choosing to believe, then you should stay away from the market. There is just no point in investing in the stock market if you're going with that narrative. I am of the view that the markets are going to do well substantially going forward in the future. We are in the middle of a bull run somewhere or at the early leg of the bull run. So Nifty is going to hit 25,000 at some point. You just need to define that time period. So the moment Nifty hits 25,000, if you have invested in good, fundamentally good stocks that are not going crazy and that are not going bonkers and that are not getting cut, you will make money. It's just an automatic, such a simple logical play there. Now let me talk about the sixth point, which is for slightly more advanced users or advanced players in the stock market, which is about value buying. Right, so a lot of people do value buy. For example, I've explained the concept of value buying, that Mr. Moini Chhabrai, who is a major billionaire investor, he does value buying. Mr. Rakesh Jhunjhunwala does value buying. What it simply means is that if some good stocks are available at an extremely low price, go and buy it and sell it at almost a book value level. You are not investing in these companies for growth potential of these companies, but because of the fact that the value at which they exist right now is very inexpensive. Now, I have spoken about this earlier, that PSU banks are available at a discount. Go buy it. That is my thought process. This is not an investment advice. That is what I am doing. According to me, those were value buys. I am doing value buying in these type of stocks. Do you need to do it? No. If you're a complete beginner, you don't even need to do it. You can go and buy good quality stocks, as I was speaking on my previous point. Now comes the seventh point regarding swing trading. Now, there are very few swing trading recommendations that I have given so far on this channel. For example, I spoke about JP Power. When I gave that swing trading recommendation, people made 25-30% profit on it. Now, please understand what swing trading is. If you sit on a swing trade stock, like a long-term stock, you are going to lose money. It is not a value buy. It is not a long-term play. It is a swing trade. So please take the swing trade, complete the entire cycle. if there is no limit to greed, if I give a swing trade recommendation, if the stock has already climbed by like 30, 40, 50%, sell it, right? And move on. If you're sticking by it that, Akshat told us to buy this stock, and now if I get questions around JP Power, I'm just using JP Power as an example. I'm still holding big quantities of JP Power as of now. No problem in the stock as of now. But I'm just giving you an example that when I say swing trading, please act as per your own diligence and intelligence that, okay, swing trade means that you have made profit, move on, right? I cannot control the greed that people display. So I hope you understand my viewpoint on that. Now, just very quickly, let me add another disclaimer here because people might construe me in a negative sense. So the way I do swing trading is fairly simple, that for example, I'll identify a certain swing trade. If it is not in a not so great stock, for example, JP Power, I'll buy bulk quantities. When it climbs up by 25-30%, I'll sell my 30% stake, right? Then I'm in profit. Then I'm holding 70% of that quantity. So even if the stock falls, I'm still covered by the money that I've made. That is a sensible way of doing swing trading. So please listen to the entire videos that I'm making. If you only understand half the things, implement half the things, you will not be able to execute that strategy well. That's part A. Part B is that don't worry about JP Power. It will still come back. That should not be an issue. Again, this is not a buying, selling recommendation. Please act as per your own due diligence. This is not an investment advice. Do as per what your analysis says. I'm just telling you whatever I'm doing in the market. Okay. So coming to the 8th and final point, I've been saying for some time now that the markets are going to consolidate, right? Consolidation means that the markets are neither going to go up too much, neither they are going to come down too much. Yes, there will be intermediary phases when the market corrects by 5%, it goes up by 5-7%. So what will happen in this market? Number one, you must prepare for a slight correction. How do you prepare for a slight correction? A, buy good fundamentally sound stocks that you do not lose sleep over. I have spoken about the fact that I am investing big in Hindustan Unilever. I have already started taking those positions. I bought more of Hindustan Unilever today from that angle. I am investing in HDFC Group. That is what I am doing. ICICI fell today. I bought more of ICICI Bank. These are the type of companies that I will lose no sleep over even if they fall by 10%. Right? Will I lose it? No. Of course, I'll feel a little bit sad that, my ICICI Bank stock fell by 10%. Okay, I'll be a little bit distressed from that angle, but it's not something that I'll lose my sleep over, right, on that. Because I know that, hey, if ICICI fall by 10%, it is going to make its new lifetime high at some point, right? It might happen after 6 months, it might happen after 1 year, it might happen after 2 years. Whenever the market starts climbing up again, these stocks have to go up back. So, the bottom line here is, around point 8 is that you must aggregate good quality stocks where you are not losing your sleep. That is what I am doing. Whatever swing trades that I am taking now, these are very specifically designed swing trades. I'll discuss all that stuff with you. Yes, I invest in small cap, mid cap stock. I'll come out with a video tomorrow on a small cap stock that I'm starting to aggregate. Again, do your due diligence and purchase it. These are all the moves that I'm making. I hope you found the video to be useful and insightful. It was done with the intent of helping you understand more about how people think about stock markets, how investors act. Central point being that there is no point in being panicking. If you have conviction in whatever you are doing in the stock market, you will easily be able to hold the stocks and you will enjoy both the upsides and the downsides of the market. So I hope you enjoyed the video. Give it a thumbs up and I'll see you the next time.